Yields rapidly rising this week. The 10-year now back near levels not seen in about 3 months. This is the Fed updated its policy earlier in the week, saying it may soon be pulling back on monthly bond buying. For more on what investors should do, let's bring in Double Line Capital's Deputy Chief Investment Officer, Jeff Sherman. Jeff, great to see you as always. I mean, interesting that this move really came over the last 36 hours and not really back on Tuesday, Wednesday during the Fed meeting. Is the driving force behind this, in fact, the Bank of England, not the Fed?
No, I still think it's the Fed. I mean, when you think about what Chairman Powell said, he kind of let the cat out of the bag during the press conference once again. And he has this propensity to do so. If you think back to kind of the days of automatic pilot as well. But that was a very quick reaction to the bond market. But I think what people realize is as they digested what the Fed's behavior was, is that the rapid rise, the rapid pace to which the Fed expects to get out of their bond purchase, I think is what kind of caught the bond market by surprise. And it took a little bit of time for people to digest that. And what I mean by that was a casual comment by Chairman Powell, where he came out and said that he expects to be done with their bond purchases by mid-2022. And so if you think about the pace with which the last tapering was done, it was over about 10 months or so. So depending on when they start, they're likely to announce the reduction in purchases in November. But you're talking about somewhere between 6 to 8 months and reducing by $15 to $20 billion per month of these purchases. Now, at the surface, it doesn't sound like much when you're buying $120 billion worth of bonds per month. But if you think about who's been the marginal buyer within the marketplace, it has been the Fed. And that's a very large discrepancy from where they are today. So it's not shocking to see that here we are, we're back to the levels we saw at the end of the second quarter.